Investors still digesting inflation data as we begin a new week on Wall Street. That latest CPI numbers coming in slightly hotter than expected, but wholesale prices showed no change last month. It pointed to continued easing in inflation. Joining us right now to help us decipher all the recent signals is former Fed Vice Chairman Roger Ferguson. He is former president and CEO of TIAA. He's now Vice Chairman of the Business Council and a CNBC contributor. And Roger, let me just ask, if you were sitting in that FOMC meeting that takes place at the beginning of November, what would you vote? How would you deal with things at that point, based on the numbers that we've seen recently?
Well, look, I started with the last time I was on, and we were talking about this. I thought that the first move should have been 25 basis points, wouldn't have dissented at that point. I think they're still in a process of easing, which I think is probably on balance correct. You're right to say that the most recent, some of the most recent inflation data were a little hot, but not dramatically so. And we've heard from a number of them that basically said something I agree with, which is the path back towards 2% is going to be somewhat uneven. So I think the better move would be at least one more 25 basis point reduction to move closer to neutral, and then we'll see where we are.
You would not have dissented. There was one dissent, Michelle Bowman, who did dissent and said she didn't want to cut 50 basis points. It sounds to me like there has been more vocalization from other Fed governors, other voting members who say that they would not like to see this anything other than a gradual move on these things. You're right, it's probably working around a consensus, but it did look like in the minutes that the Fed chair, Powell, maybe put a little more pressure on people to get to that 50 basis points. How does that generally play out when you are trying to build consensus?
Well, look, I've read the minutes pretty much the same way you just did. It was a very complicated discussion, we'll put it that way. They did eventually reach a consensus, but I suspect there are many folks who were, not totally comfortable with that consensus, and you've heard some of that coming forward. Having said that, I think there's a general consensus that all of the participants shared that policy is in restrictive territory. Inflation had been coming down and continues to gradually come down. Labor markets are in better balance. And so at that point, it's a judgment call. Certainly time to move, moving a little quicker earlier. I think most people would say if that's the chairman's preference, then we'll go with it. We've since heard from a number of people that they're willing to continue to move gradually, and so I think that feeds the general notion of more 25 basis point cuts, not 50 basis point cuts going forward.
Is the possibility of a pause on the table or not at this point?
I don't think the possibility of a pause is actively on the table based on the data seen to date. Now, recognize there'll be more data that come in. But there was some discussion of that with some of the participants in the public. And I think Raphael Bostic suggested he might be open for a pause, quote, if the data suggests that's the right thing to do. A couple of other policymakers, I think Governor Chris Waller, President Williams from New York, both sort of shrugged off the pause notion, suggesting that the data was always going to be a little uneven. So I think there's not much consensus for a pause right now. That may emerge over time, but based on the data thus far, I suspect most people are going to go into the meeting thinking 25 basis points is the next thing.
Roger, we had a conversation earlier this morning about just how restrictive rates are at this point. The economy is doing very well, even where things stand. There has been demand from business as rates have come down. It doesn't feel like restrictive territory that some of us who are older have gotten used to.
I understand that. One could look at the Atlanta Fed GDP Now forecast for the third quarter, which was as of a few days ago, I think October 9th or 10th, and that number was roughly 3.2%. No one thinks that, very few people would imagine that potential growth here is 3.2%. All of that feeds into the question you just raised, which is exactly how restrictive are we? And that's a reason I think to be pretty cautious and prudent here and move pretty slowly. And you'd see on the committee quite a range of views on where they're likely to end up, which is another sense that no one really knows quite what the so-called neutral rate is or how far we are away from that elusive notion of the neutral rate. So moving gradually, being open to a pause if the data disappoint, I think is the better approach for the next couple of meetings.